Ladies and gentlemen, good day and welcome to the Q2 FY26 earnings conference call of Eldeco Housing and Industries Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Bhatt from EY. Thank you, and over to you, Mr. Bhatt.
Thank you. Thank you everyone for joining us on the call. Before we proceed to the call, let me remind you that today's discussion may contain forward-looking statements that may involve known and unknown risks, uncertainties, and other factors. It must be viewed in conjunction with a business risk that could cause future results, performance, or argument to differ significantly from what is expressed and implied by such forward-looking statements. Please note, the results and presentation are available on the exchanges. Should you need any assistance to receive them, you can write to us and we'll be happy to send them over. Today we have on the call the senior management of Eldeco Housing and Industries Limited, which is represented by Mr. Pankaj Bajaj, Chairman and Managing Director, Mr. Manish Jaiswal, Group CEO, Mr. Rajiv Khurana, Group Vice President, Accounts and Taxation. We will begin with the highlights of the quarter, followed by Q&A. Now I would like to hand over the call to Mr. Pankaj Bajaj for his opening remarks. Over to you, sir.
Thanks, Abhishek. Good afternoon, everyone, and thank you for joining us today in our earnings call. So, regarding quarter one, we've seen continued momentum this quarter with strong collections and steady execution across projects. While Q1 was driven by strong bookings from new launches, Q2 has been characterized by healthy collections, improved deliveries, and steady construction progress, highlighting customer confidence and our ability to execute as planned. Now, let me take you through the key operational highlights for the quarter. The booking value for the quarter stood at rupees 88.1 crore against 102.9 crores in Q2 FY25, in spite of there being no new launch in this quarter. Now, this is a very heartening number. H1 FY26 bookings stood at 309 crores, up 91% year-on-year, supported by the successful launches in Q1. Collections stood at rupees 91.3 crores for the quarter, up 76% year-on-year, driven by strong bookings in previous quarters and timely construction progress. We delivered 90 homes in Q2 FY26, totaling 1.19 lakh square feet, a growth of 95% year-on-year. H1 FY26 deliveries were 2.03 lakh square feet across 191 homes. Construction spend for the quarter was rupees 37.3 crores, up 11% from last year, and half-yearly H1 FY26 construction spend was rupees 76.6 crores, indicating consistency in execution across projects. Now moving to the key updates. After the successful Q1 launches of Eldeco Hanging Gardens and Eldeco Skywalk, we are now preparing for the launch of our new township project, Eldeco Solano Gardens, on New Jail Road in Lucknow later this year. The project is spread over 50 acres with an estimated gross development value of rupees 1,000 crores and is expected to be a key growth driver for the coming years. We are awaiting final approvals like the environment clearance and RERA registration for this project. In addition to Solano Gardens, our aggregated land for new projects has now increased to 36.8 acres, and we are actively working on adding more acreage before moving to the next stage of approvals in these lands. With strong collections, steady construction progress, and the upcoming launch of Eldeco Solano Gardens, we are confident about delivering growth in the second half of the year. Our focus remains on strategic land additions, disciplined execution, and delivering value to our customers in Lucknow's expanding real estate market. Coming to our financial performance, the consolidated total income for the quarter stood at rupees 35.3 crores compared to 36.4 crores in Q2 of FY25. Consolidated EBITDA for the quarter was rupees 5.5 crores with an EBITDA margin of 15.7%. Profit after tax for the quarter stood at rupees 2.6 crores. I believe the investor presentation should already be with most of you, and there's much more granularity in the numbers in the presentation. So I'll now hand it over to the moderator and open the floor for questions if there are any.
Thank you very much, sir. We will now begin with the question and answer session. Anyone who wishes to ask questions may press star and one on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Gunit Singh from Counter Cyclical PMS. Please go ahead.
Hi, sir. I'm audible.
Yes, please proceed.
Thank you very much for the opportunity. So have we started booking, recognizing revenues for Eldeco Interior Phase 2?
What's the question? When will we start recognizing revenue, or what is the question?
Yes. Have we? That's the question. Have we started recognizing revenue?
I think in the quarter that we are in right now, Q3 and Q4 is when the revenue recognition starts.
Perfect. And as per Eldeco City at Bareilly, in the last Concall, if I remember, we mentioned that we would be only getting our costs, recovering our costs from that. So is that still the status?
Yeah, that's the status. And we are told by our partners there that that should happen in the current quarter or maximum next quarter.
All right. And what amount is that?
I think as per the commercial understanding, it is our principal plus and the committed IRR. The total amount would be about, I think, 65 odd crores. Could be plus or minus, but 65 to 70 is the number. That includes the principal investment. But this is the money, cash, which we are going to get back.
All right. And we are coming up with the IPO of our parent company, Eldeco. So I just would like to understand that Eldeco Housing, our current listed company, and the parent company, would they still work independently of each other, or how will the arrangement be once that?
No, Puneet, I would like to correct you. There is no parent or subsidiary relationship between the two. And they're two completely separate companies with separate management and shareholding pattern. It happens that I am the promoter of both, but they run independently. Eldeco Housing works in the geographical market of Lucknow and Gorakhpur, and EIPL, the other company, works in other cities. So there's no geographical overlap between the companies. But there's no parent-subsidiary kind of relationship between the two.
Got it. And it should continue this way, sir.
Yes, it will. As of now, it will continue like that.
Got it. Thank you very much. I'll join that with you.
Thank you, Puneet.
Thank you. The next question is from the line of Runeet Kapoor from Investar Investments. Please go ahead.
Yeah. Hi. Thanks for the opportunity. So I want to know regarding Eldeco Trinity. In the last couple of 3-4 months, a lot of players have launched in the Gomti Nagar extension. Like MR has launched at a higher price compared to us, and then the local players have launched at lower rates. So I want to know what's the current rate we are quoting at, and because MR has launched at a higher rate, so is there scope for realization growth in that market?
Yes, it is. So as of now, you would have noticed that the sale numbers have not moved much. We are not actively promoting the project right now. We are waiting for some of the common areas and the sample apartment to get ready, and we feel that as soon as we unveil that to the market, the price per square foot realization will definitely see an upward nudge, and there will be upward take in the absorption numbers also. So if you would have noticed, last couple of quarters, sales in this project have been a little low, but we are expecting the sample apartment, which showcases this is an ultra luxury project for the market of Lucknow. So we feel that we need to actually show what we are giving. So that will get ready sometime in February, in another 3 months' time, and that's when we expect an uptake both in the per square foot realization and in the sale numbers here.
Don't you feel that the competition coming in would make it a price-sensitive market, or like?
No, not really. It's not that there's a lot of oversupply. These are both MR and ours are both small projects. They are not massive supply. So these are boutique luxury projects. It's not that there are a number of such projects. In fact, both of them being close to each other is a complementary thing rather than a competitive thing.
No, but around, there have been other local players also launched at a lower realizations, so that they won't cause a pricing pressure as such.
We are in a competitive market. Those pressures will always be, whether it is Trinity or it is Solano Gardens or City, they'll always be, the customer will always have options. So it is our job to show them value and give them value for money even at a higher price point. So I cannot say that there won't be any competition. They will be there from MR, from local players, and that is good. But yes, it will be there, and we are confident of our product and our deliveries, and that's the whole premise of the business.
Okay, and what is the current realization, and what are you expecting it to grow, like, once the slow flat comes?
That would be, I don't think I should be predicting what I would expect it to. I think the current realization, can any one of my colleagues help me here? What's the current realization in Trinity? I don't have that number readily. I have the blended weighted average for the company, but for this project, if any one of my colleagues would want to jump in.
It's around 8,000 plus some change, sir. 8250 or something like that.
On super area.
Super area, yes.
Yeah.
So that would be around 12,000 carpet, like.
Let's see what the new price discovery happens at. I think that would be very forward-looking to make a comment here now. But yes, I do expect it to go up.
So on carpet basis, what is it like? It would be like around 11,000?
On carpet, yes, it should be over 12,000. Yes.
Yeah, 11.
Right.
Okay.
Yeah.
And lastly, like, any update on Gorakhpur? Because you said, like, by next quarter you should be announcing, so I'm hoping to announce something.
It took longer than we expected, but we have a couple of term sheets out. But it's not at a stage that I would make a formal announcement on.
Okay. But this would be a joint development or like a...
No, as of now, these are outright.
Okay.
Yeah. But
Okay.
Vineet, I would not like to, at this stage, make a formal announcement. It's too early. There's some very token advances which have gone, some term sheets being negotiated, so too early. But we are working on it.
But what is the, like, average realization in the market, like, in the Gorakhpur market, per se?
It's similar to Lucknow.
It will be lower, right? Like, lower end.
I beg your pardon?
It should be the lower end of Lucknow, right? Compared, like, 15%.
No, it's surprisingly, it's similar to Lucknow.
Okay. And the competition is not quite high, like there's no national player present in the market as such. Right?
No, not to my knowledge, no.
Okay. And any idea on the absorption levels, like, if you have the numbers?
So right now, because it's linked to the earlier question, there's no national level player there, so the market is quite unorganized, and there are a number of small players, and so data is a little scarce. You don't have formal data coming out of that market, so I would not like to speculate. But right now, the absorption numbers on the aggregate are not as we think a emerging city like Gorakhpur should have. The kind of infra improvement which is happening there, we feel there's a lot of upside there. That's why we have made this decision to enter that market.
Okay. And now just to follow up with the previous participant specified that your IPO of your like promoter entity is coming up. So in terms of that, like there's a intercompany loan also. So that would be squared off before that. Like?
I already answered that question. Yes.
Okay.
The Bareilly transaction is that transaction, which will we are told that it will be squared up within this quarter or maximum next quarter.
Okay. And the royalty is expected to continue, like, post the IPO also? Yeah.
Yeah, that's because the bigger company, the unlisted company, gives a lot of corporate services to the small. Otherwise, Eldeco Housing is not able to have those kind of resources in terms of legal and advertising and, finance and all the senior resources which are linked to it. So there's a facility come royalty kind of agreement. So that is going to continue. I think that really benefits our company, which is Eldeco Housing, because we get access to better resources than we can have on a standalone basis.
Yeah. Okay. Thank you. That's it from my side. Yeah.
Thank you.
Thank you. A reminder to all the participants that you may please press star and one to ask questions. The next question is from the line of Anjali Singh from Bansal Family Office. Please go ahead.
Hi. Thanks for the opportunity. So my first question is for Eldeco Solano Gardens. So how are you planning the launch phasing? Also, what would be the average realization from this project?
So I think in my opening remarks, I said that the last set of approvals is pending, which is the environment clearance and the RERA registration. In fact, we already applied for the RERA registration. Once the RERA registration comes, which I expect, I don't see any impediment there. Should be this month or next month, and within 3 or 4 weeks of that, we should be launching that project. So that is as far as the timelines go. But it is a big project with it's going to have plain plotted development, villas. It is going to have group housing, and maybe we may be starting senior living kind of project also within this township. So it's going to be phased out over many years, but we are going to start with the villas within this financial year, and that's what it looks like. As far as the average realization goes, I think over the life of the project, it will match the realization that we are currently having in the other projects. We declare that every quarter. So that's about 5,000 to 6,000 rupees a square foot. So the plots are going to be in that range, and the group housing also probably could be higher, depending on when we launch it. But as of now, one would underwrite it at 5,000 to 6,000.
Okay. So one more question. With few deliveries planned for second half of this year, how much growth in margins can we expect from current 16% from delivery?
I would expect a growth in margins because I think in the earlier con calls we did explain that why and how Imperial Phase 2 has a higher margin. Because Imperial Phase 1 did not have a lot of margin, a lot of amenities which are common to both the phases are loaded onto Imperial Phase 1. So it showed a lower margin. But Imperial Phase 2, which is where we expect to start recognizing revenue in this or the next quarter, the margin will be much higher. So specifically, I don't know if we have or we declare margins for project-wise, but I think right now this quarter the margins are looking at EBITDA margin looking at 25%, but next quarter it could be as high as 35 or 40% because of Imperial 2.
Okay.
Yeah.
Thank you so much, sir. Thank you.
Yeah.
All the best.
Thank you.
Thank you, sir. The next question is from the line of Varun Gupta, an individual investor. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity. So I have a couple of questions. My first question is on the realization front. So why our realization has dropped in quarter 2? Because it was close to 6,500 in previous quarter. In this quarter, I think the number has dropped to 6,000.
Yeah, I'll invite my colleague Rajivji to come in. Primarily it has got to do with the mix of projects which has got recognized this quarter. In the absence of a high-end project getting recognized, I think we recognize some low realization kind of projects. Rajivji, can you come in and explain this?
Yeah. Hi. Basically, it's depending on the revenue recognition and the projects which are involved in the revenue.
Sorry to interrupt you, sir. Your audio is not clear.
Hello?
Yes, sir. You may proceed.
Is it audible now?
Yes.
No, there's an echo in your
There is an
Rajivji.
echo. Yeah.
There's an echo.
Is it audible now?
Yeah,
Yes,
better.
sir. Please, sir.
Yeah. So basically, we have a portfolio project which is recognized in this quarter, so which have a different GP altogether. So we have very good GP in one of the project which is recognized twin tower, but on the other side, we have another EWS allergy Saksham, which is also recognized in this. So being weighted to these things, so our GP ratio and these things are basically impacting our weighted GP. So that's the reason for reduction in GP of the last quarter.
So if I can supplement that, I don't think one can make a long-term kind of assessment that the GP, the margins of the company are dropping. It's just that this quarter we recognize more of EWS, which is economically weaker section kind of
Absolutely.
product that we did. And next quarter, I think it will revert to normal.
Yeah.
How much is the ready-to-use inventory sitting in our balance sheet? Because we are carrying close to 600 crore of inventory. So like in the last Concall also, I think some of the participants have requested, like in the presentation, which is very good. So can we get some kind of visibility on the revenue also, like project-wise, which project is getting recognized? Just to get the sense of the numbers.
Yeah. So we should start recognizing Imperial 2 this quarter or the next quarter. So it will be touch and go whether it will be this quarter or next, but it will start. And then the next project which starts getting recognized, big one, is Latitude 27. So Imperial will carry us through. It's a big project. It will carry us through for the next 3 or 4 quarters in terms of revenue recognition, and then that will be followed by Latitude 27.
So Imperial will start from quarter 3.
Yeah, it should either, as I said, it should be either quarter 3 or quarter 4. Hopefully, it should be quarter 3.
Okay. And in the current 600 crore inventory which we are carrying, so how much is the value of the ready-to-use unit, like already where the completion is received, but that is, units are unsold? Can we get that number also?
Maybe what we will do is change our format and actually disclose that in our next presentation, and let us get back to you on that number after the call. Maybe we'll send it to you. If Abhishek can take your contact details and we'll send you that number.
Okay. And what is the margin we are targeting for Trinity and Solano, like at a GP level?
We purchase 25 to 30%.
25 to 30%.
Yeah.
That's it, sir. Thank you. Thank you.
Thank you. We'll take the next question from the line of Faraz Ahmed, an individual investor. Please go ahead.
Hello, am I audible?
Yes, sir. Please proceed.
All right. So, thank you for this opportunity. Just wanted to understand if you can help me understand how this brand loyalty in Lucknow allows us for pricing premium versus, other peers which are there in the market.
So very good question. So if you look at the business model, it is to a large extent dependent on advances from customers. So basically you buy land or arrange land in the form of a JDA, or you buy land and then you get the approvals, and the construction process and the development process takes 3 to 4 years. During that period, people come forward and they book their housing units. Now, why would somebody book a house for a delivery which is 4 years later, and all he gets to see is a brochure and some promises and some walkthrough animation? He does that because he has seen the company for the last 30 years, or his friends have seen it, or his family have done it in the past. And they feel that whatever these guys promise, they actually deliver something better than that. So somebody else who does not have that kind of brand recognition or loyalty would find it relatively more difficult to attract such customers and convince them, and hence would not be able to charge a premium, or would have to price his product lower in order to convert that into a booking or a commitment from the customer. But with Eldeco, that discount is not there. In fact, there's a premium, and that is purely a function of the kind of years we have spent in the market fulfilling our promises. So it's the brand is... Yes?
Sorry, please continue.
So the brand is everything in terms of being able to get advances from customers and to be able to charge a premium.
So just on this, what do you think would be, on an average, how much premium are we charging in comparison to others? Like just a percentage-wise, if you can just throw some light on that.
Again, a fantastic question. That premium used to be about 5 to 10%, but if you remember from the year 2010 to 2020 in North India, there was a lot of cynicism towards real estate brands and a number of high-profile, meltdowns and failures by real estate developers in North India. After the advent of RERA and after COVID, the market has really consolidated towards players who they feel are dependable and who will deliver. So that is translated into a higher premium. What used to be 5% or 10% is now as much as 20 to 30%, which if you look at it is a phenomenal premium which one gets for the same product. Not the same product, the product also tends to be a little superior. But 30% pricing premium is what we are observing in the market for a good brand.
Sir, if I could just ask a last question.
But just to clarify, that's just a qualitative assessment. I mean, there's no proof of that 30%. It's just one assesses that one gets a 20 to 30% premium because of the good stuff that our company has done in the past.
Understood. So one last question. The Lucknow market has seen, steady absorption and limited speculative inventory. So do you see any scope for price-led growth, or is volume-led expansion the more sustainable?
So I think it's a undersupplied market. There's a lot of demand for quality housing, but that's in the region of say rupees 60 lakhs to rupees 1.5 crores. But unfortunately in Lucknow for many years and many quarters, supply has not been forthcoming either from us or other players in the numbers which the market demands. What has not happened is that because of the supply constraint, prices have not gone up. Because we feel that actually people beyond that price point, there is a very limited market of 2 crores, 3 crores, 4 crores. Typically in a supply constrained market, prices should rise, but they have not risen because actually the demand is for that price point. So to answer your question, going forward, I expect a huge uptake if supply gets unlocked. On the absorption side, the upside is much larger than it is on the pricing side. Now, I do not expect prices to be doubling in 2 years, but potentially absorption numbers should be doubling in 2-3 years if the right kind of supply came in. I don't know if that answers your question.
So even if there is some, say, pricing pressure or anything which is there, we will still be having a premium in comparison to our peers as well.
Well, that remains to be seen, but one expects that the brand attraction should still be there even in a soft market. In fact, it should be there even more. I find in my experience that premium for good brands tends to compress a little in good markets and tends to expand a little in bad markets. The importance of the brand becomes even more in a bad market or a soft market.
Correct. Thank you so much. Thanks a lot.
Thank you for that. Yeah.
It was very useful.
Thank you. Before we take the next question, a reminder to all the participants that you may please press star and 1 to ask questions. The next question is from the line of Ansh Singh from AJ Investments. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, just wanted to get some sense on EBITDA margins. So given the shift in project mix towards plotted developments and premium mid-income housing, how should we see EBITDA margins trending over the next 12 to 18 months?
So the next 12 to 18 months, our major revenue recognition is going to be coming from Imperial 2. And there the EBITDA margins are, Rajivji, about 35%. What is the EBITDA margin in Imperial 2?
Around 32%.
Yeah, so about 30% is what you should be looking at over the next 12 to 18 months. because Imperial 2 is the main project which is going to get recognized.
Understood, sir. Understood. So also, can you help me understand what proportion of our sales in H1 FY26 came from premium versus mid-income segments? And also, do you expect Eldeco's Solano realization to exceed current portfolio average?
No, the second part, no. I have already answered that we expect Solano to be in similar lines. And as far as the breakup of, you want breakup of the sales which have happened in the first 2 quarters?
Yes, definitely. Yes.
So they were largely Eldeco Hanging Gardens, which is a upper mid-income kind of a project. I think our average realization there is about 6,500 rupees a square foot or 6,800. And Skywalk, which is again similar, a slightly lower price category of about rupees 6,000 or 5,500 rupees a square foot.
Okay, sir. That's helpful. That's from my side. Thank you, sir.
In the last quarter, we launched these 2 projects, and they constitute the major sales this year. But I hope you have noticed that in the first 6 months of the year, we have done booking of more than 300 crore rupees, which is like in 6 months itself, we are nearing the number which we did in the entire year last year, and our last year was our best ever. So our run rate is much higher than we've ever been.
Oh, that's great, sir.
Yes.
Thank you, sir. Thank you. That's from my side, sir.
Thank you. The next question is from the line of Manan Patel, an individual investor. Please go ahead.
Am I audible?
Yes, sir. Please proceed.
Thank you. Thank you for the opportunity. Sir, the first question is continuation of the previous one. You mentioned that we have done already 300 crores, and previous 2 years also we were able to cross 300 crores in terms of area booking. So do we foresee ourselves doing 500 plus crores over next 2-3 years on a sustainable basis?
So we have a lot of hopes on Solano Gardens, which is our next major launch. I'm happy that 300 crore rupees seems to be the new normal for the company. If you remember, we used to be at about 150 to 180 crores, but 300 plus is the new normal. This year, because of a Solano Garden launch comes, then we should be crossing 500, which is a statement I already made earlier. And I think that should be done. But going forward, is 500 going to be the new normal? For that, we need to quickly bring some new projects towards launch stage. We have already started working on that. In our presentation, we have disclosed that we have another 35 acres of land which is under aggregation. We want to increase that. So I should be able to answer that question in the next quarter, hopefully. I would not like to make a comment that 500 is the new normal. It is definitely going to be achieved this year. But in FY27, I would like to see the existing, the new pipeline to be closer to launch before I commit that.
And sir, from an aspirational perspective,
100% aspirational. Manan, इतना कम aspiration से थोड़ी कर रहे हैं. 500 करोड़ की aspiration नहीं है. We have more aspiration.
No, absolutely, sir. So just wanted
So
to
we
understand.
are okay. Aspiration and goal is much more than 500 crores annually on a stabilized basis. I thought your question was in the immediate quarter. That I can't answer. But yes, the vision is, as I said, Lucknow is an undersupplied market. We think that this market can sustain a much larger number on a consistent basis and a sustainable basis. Yes. And we are working towards that. I can't put a timeline in terms of which quarter, which year, but we are going towards that.
Understood, sir. Understood. So that answers my question. And sir, one small bookkeeping question. Eldeco Select has, like I can see from presentation, it has been applied for CC in 2021. And 27 crores of area is booked, collection is received, but it has not been recognized from what I understand. So,
I think we have recognized that. Rajeev ji, can you come in again, please? Yes.
Hello.
Hello.
Hello. Is it audible? Yeah, we have recognized.
Okay. So it's still there in ongoing projects and applied for CC.
Yeah, we should actually move it to the completed project. I think technically we have not received completion certificate. That's why we not moved it. But in terms of recognition, we've already recognized.
Understood. Understood. Thanks a lot, sir, and wish you all the best.
Thank you, Anand.
Thank you. Participants, you may please press star and one to ask questions. As there are no further questions from the participants, I now hand the conference over to the management for closing comments. Thank you, and over to you, sir.
Okay. Thank you, ladies and gentlemen, and thank you for your support. And this is an important quarter for us, the current Q3 one. Hopefully, in the next call, we'll come back with good news as far as the commencement of revenue recognition in Interior 2, number 1, and the launch of Solano Gardens. Hopefully, we should have achieved both, and I hope that we report these two important updates to you next quarter. So see you next time. Thank you.
Thank you, members of the management. On behalf of Eldeco Housing and Industries Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.